Andy Tuttle with the Tuttle Group to give you this week's market update. Now, stocks are higher and mortgage bonds are lower to start the week, which, of course, means higher interest rates. It's also a quiet economic news day today, but the rest of the week's going to be packed with a ton of housing data. It's also going to give us a sense of what to expect for the end of the year in the housing market. Now, in the meantime, economists keep praising that inflation is coming down, but the consumers, we do not agree. So who's right? Bad news, they both are. Economists are pointing to the rate of inflation, which means that prices are rising at a slower pace than they were, but they're still going up. Consumers are feeling the cumulative impact of inflation over the past few years, and that has been very painful. Inflation, it's a tax, but I think if we view inflation as a wall that we have to climb over to reach our savings, retirement, our quality of life goals, I think that's going to help us paint this picture a little more clearly. At least I hope it does. So let's say that 4 years ago, the wall was only 5 feet high. And then that year, they built the wall 15 feet higher. Then the next year, they added another 20 feet. And the next year, 20 feet again. But then this past year, they only added 10 feet of wall. Economists are going to come out and say, look, we cut the rate at which we built the wall in half from 20 feet to 10 feet. Things are getting better. Yeah, but then we say, over the last 4 years, though, you have built 65 feet of wall for me to climb. So that's the difference in the rate of inflation, which they put on headlines, talk about on TV to make everything sound hunky-dory positive, versus the cumulative impact, which over time to us, well, it looks like a daunting obstacle. So hang in there. Hope is on the horizon. And if that rate of change in inflation comes down, mortgage rates are going to come back down too. So again, hang in there. And even though rates have some potential to go lower over the next few months, they're still higher than we want. But don't worry, you get a great team, great strategy. You can win in any market. So here's some tips. Work with your realtor to negotiate that offer. Don't overpay. Get on our fast track program, which frankly, it's the next best thing to cash. Do that before you make an offer. This is going to massively help your negotiating power. Leverage that 2-1 buy down inflation buster program we've talked about. 2% in seller concessions can get you a 2% below market rate for the first year and a 1% below market rate the second year. If you do want to learn more about that program, just click that link in the description. All right. So good luck out there. And if you do find this video helpful, please do me a favor. Just take a quick second, hit that like button. It helps me know that this is the content you want. And until next time, happy hunting. We're only a phone call away. If you need us, remember to be the buffalo. Thanks for watching.